Wow. Okay. I'll give it a couple minutes, or you want
Yeah.
to just get going there?
No, let's go. Let's go, Tom. Sounds good.
Go for it.
All right. Let me share my screen. Okay. So we've had a little bit of a reprieve in rates because obviously the stock market is having issues, dramatic issues. So people are kind of parking their money short term in bonds. I don't think that's going to continue because it's all about inflation. The I word is out there. It's just all anyone talks about, and the Fed is just intent on stamping it out. I think they're going to overshoot, but that overshoot is going to happen sometime in the next 6 to 10 months. So we're still going to see these rates climb after this. We're probably, I would think the market's going to settle out a little bit, and that'll start to climb back up on rates. But we gained about a tenth of a point in govy loans, but we gained almost a quarter point in conventional loans. So we were at just pushing 5.25 on conventional. Now we're right at 5 with a point. And the same with these home ready deals where we were at 5.375, and that with paying a full point. Now it's 5 1/8, paying a half point. So we'll probably see that for maybe a week or so, and then I think it's going to start going back up again. We had a point about 7 or 8 days ago where we were quoting rates in the high 5s, 5.85. So we had a really high spike one day, but it's settled out into the low 5s again for now. New products. This is kind of a cool product. Freddie Mac had this new program called Borrow Smart. So anybody who earns 80% of the median income, which in Hennepin County is $63,000 and change, they can get up to 80% you can get $1,250. At 50% you can get $2,500 in down payment assistance or closing costs. They can go to either one of those two things. I actually have two of these going already. There's nothing else to it other than it's purely income driven. So if they make $54,000, you can get $2,500. If they make $63,000 or less, they can get $1,250, and that can go towards down payment or closing costs. It's a pretty good little program. They have to take an education, like an online course, to get that money, but that takes 45 minutes to an hour of their time for that kind of money. It's worth the time. What else is happening? We're getting appraisals back in like record times now. Obviously, they're virtually shut down with the rates having gone up. The refinance boom is just over. So we're seeing appraisals come back in 7 to 10 days. So if you wanted to do a 2 or 3 week closing, we can probably do that. I'm getting a lot more. This is interesting. I'm getting a lot more appraisal waivers with less than 20% down. I've gotten, I would say, 4 or 5 between 90 and 85% loan to value. So if somebody's putting down 12%, I've gotten an appraisal waiver on that. So that's an interesting development.
Yeah,
I don't know if that's just I don't know if that's a trend or what's going on, but I mean, I've seen it several times in the last couple of weeks.
Any certain investors, Tom, or certain vendors that are doing that, or is it just across the board?
It all runs through Fannie and Freddie's automated underwriting system, and so it's just pure parameters of the loan. So somebody's got, it really is kind of what I think it is driven purely by net assets. So somebody has a big 401k, and I pop that in there as an asset. I'm getting more appraisal waivers by using that, even though we're not going to use their 401k as a down payment or any part of the transaction. It's just they have reserves. Makes sense. And so the AUSs seem to be looking at that much more favorably and just dropping off the waivers. Plus, I mean, I saw something on NAR where the median home price is up like almost 15% year over year. So I think those numbers are starting to catch up with the automated valuation systems that Fannie and Freddie use. So we're seeing a lot, like I said, a lot more appraisal waivers. I had one with who was it? I wasn't one of the, it was one of my different realtors, but I started out with an appraisal waiver at 365. They ended up getting the offer accepted at 380. And I got an appraisal waiver all the way up the line. So I never had to get an appraisal on that one. Yeah. But it was listed at 357, I think it was. And I got the appraisal waiver at 380. So that's pretty good. But I always run it just to see, because I mean that's a huge thing. You're in multiples and you put on your approval letter, your appraisal is waived. That's I mean, take that question right out of the
well,
equation.
it worked on my listings. So
yeah, there you go.
Yeah.
So it's I'm seeing a lot more of it now. What else? Anything else happening?
Are you seeing any ARMs? You've seen any ARMs? I have one client who said they had that set up with, I think.
Yeah, we had ARMs were really kind of crushing fixed pricing, but we've seen with this massive spike, I can't even get par pricing on an ARM right now. I don't know what's going on with that, but it'll probably catch up ultimately. But I priced it out this morning. It came in at, I want to say 5% on standard Fannie 30-year fixed, but it was like 5.25 with 2 points on a 7-year ARM, which is weird. So there's those. I just think that the investors are just saying, let's leave it off the table because we can't hedge for that right now. But it'll come back. I mean, when rates first started going up, we were probably, ARMs are about a half a point better in price. But once everything settles out, I think with the fixed market and the equity market, we'll see the ARMs come back. I just think they're trying to ignore them right now.
Okay. Well, a half a point is not almost worth it, but that's my opinion.
Oh, it is. I mean, and that's a 7-year. That's fixed for 7 years. I mean, historically, 90% of the people do something, either sell, refinance, or whatever, on their mortgage every 7 years. So I would have no problem selling a home right now. None, if at price.
That's what my client said. They didn't care what happened for 7 years. They couldn't think that far.
That's exactly right. And yeah, I mean, it's. I think we're spiking, and in 7 years we'll be back where we are from a fixed rate standpoint, if not sooner. So I wouldn't be at all concerned about doing an ARM, but I just can't get a price right now. This makes no sense just because the volatility. It'll settle out. But I always make that. I always put that in my when I'm talking to borrower when they're ready to lock. I give them that option if it's there. So.
Gotcha.
What else?
Any
other
contract tips or any kind of guidance? Has anything changed in the last month of what you're seeing for acceptances? Or
yes, here's a good trick that I'm using. So somebody has 20% down, and they have been offering a $10,000 appraisal gap. Well, let's say they in the $450,000 price range, they offer 20% down and a $50,000 appraisal gap. If the appraisal comes in that low, we simply increase the loan to value up to 90% of the appraised value. Purchase price stays the same. Their cash into the transaction stays the same.
Well, that's interesting. It doesn't always mean more cash then.
No, it doesn't. As long as it got that excess cash down. The same goes for 10% down. 10% down, we can move it up to 95% loan to value. I've got 2 of those going right now. Where and it's not a big deal once you it's just renegotiating the down payment. Appraisal's in, everything's going to be fine. All we're doing is increasing the loan to value. Never had a problem getting that done. Make sense?
Mm-hmm.
So you do an amendment to the PA and say instead of being at 20% down, we do 10% down. Off we go.
Yeah.
Nothing changes.
Okay.
Except for loan to value. Yeah. And cash is the same. So that's helped a couple people win. So instead of doing a, $10,000 or $15,000 appraisal gap, I just wanted just one to do a $50,000 appraisal gap. So if it comes in low, we'll just increase the loan to value and it won't cost me more cash.
Interesting. That's great.
Yeah. So I had that conversation many times in the last couple of weeks. So keep that in your pocket. If they have at least 10% down, I can use it. I mean, and that's a tool. Because they're just always increase the loan. Because you're talking, even 5% of a $500 purchase price, that's $25,000.
Yeah.
They could put into an appraisal gap. If they were going to do 15 or 20, now they can do 40 or 50. Appraisal gap.
Tom, would that affect the rate at all if they went from a 20% down to 10 or?
Most investors it does, but the particular investor that we use most often, UWM, it doesn't. They price regardless of the loan to value. It's all the same across the board.
Cool.
Yeah, the only thing that would affect is PMI. PMI would be a factor. You would end up paying PMI.
Right.
But PMI is nothing compared to what it used to be. I mean, on a
That's true.
typical $400,000 deal, it's like $50 a month. It's not like the $200 or $300 a month it used to be.
Nice.
Sorry,
Good
guys.
info.
I gotta run. Thank you very much, Tom.
Yep.
Yep.
Anything else, anybody?
No, I'm good.
All right.
I'm
so
good.
It's going to be another long one.
Yeah, thanks for the update.
Yeah.
Thank you.
Yep. My pleasure.